And today we'll be sharing with you a very special presentation that is absolutely key to any kind of trader. Whether you're a futures trader, stock trader, options trader, currency trader, you must have a blueprint for your trading. And we're not here today to talk about a trading plan, but a blueprint for anticipating and predicting market direction. And not only market direction, but any asset that you're actually trading. So I'm very excited for today. So thank you, Reed, for the wonderful presentation. But for those of you that really don't know me, and this is the first time that we're getting acquainted, let me tell you that I have been trading actually for 11 years now, and I do trade equities, futures, and currencies. I'm the founder and CEO of TradeOutLoud.com, and this is the trading education service firm that is located in Detroit, Michigan. We do a lot of live events and online events as well. I have over a decade of investment banking experience prior to becoming a professional independent trader, and I'm certified from numerous financial institutions throughout Europe and U.S. I also run a hedge fund and a managed accounts program for a group of high net worth clients. I run a swing trading and investing signal service for equities, and of course for ETFs. And if we have time at the end of the session, I'm going to show you our performance. And like Reed said, I'm the designer of a really simple, but guys, really simple proprietary trading system that is based on price support resistance, which is key. And this is natural price support resistance, with really right price action correlated with trigger time, specific trigger time, so you don't have to waste your time when you're watching charts and when you're trying to select a trade. There are only 4 or 5, if you're a very active trader, day trader, there are only 5 times in the day when you could actually select really high odds trades. Also, strict chart correlation. You have to have all your charting in sync, and you also have to have in sync all your stocks, currencies that you're trading. Also, a strict set of trading rules, and I only have 5 rules. Guys, this is me right here at an event that I hosted a little while ago in Birmingham, Michigan. We also have online, you could see how popular we are. We do have a lot of these free events that are coming. This is one of the free events that we've organized. So you could see right here, we are a boutique company specialized on really individual education. And also what I want to share with you that our classes are rather small, and we focus on about 15 to 20 people at once to make sure that everybody's question is being answered. Even online classes are very small. So why should you listen to me, and why should you listen to Trade Out Loud, and why should you follow our trades? Why should you follow our education, and why would you listen to us? Well, first of all, let me tell you guys that last year, so for 2014, we have hired an external company to track and monitor all our trading activity, but all of it, guys. So from January 1st to December 31st, this is not really the last chart that I have, and I'm sorry for that. For those of you that really want the December 31st one, I will email it to you, and I apologize for that. But I just want to show you guys that on August 26th, right here, our portfolio was up 22%. It says here 365 days realized, but in all reality, this started on January 1st, 2014. So in 7 months, guys, in 7 months, we have made an average of 22.6% and 75.5% average, well, batting average. What I want to share with you guys that the results that you see here on the P&L side are with an account that is of $25,000 in buying power. So I just wanted to show you guys how much money you can make. Now, needless to say, and I'm going to show you the chart, that at the end of the year, I ended the year with a 78% batting average and a total realized here with 34%. And usually the end of the year is really powerful because I take advantage of everything that the end of the year has to offer, starting with cornucopia trading, Santa Claus rally, and other events that are happening, window dressing, January effect, and so on. So as you can see here, not a lot of trades that were taken, an average of 2 to 3 trades per week. Right now, we're upping up a little bit, and we're offering for our service at about 5 to 10 trades per week. And these are really high trades. And right here, I'm here to discuss with you how I select my trades and to share with you and give you some free tips on what I do. Okay, so my question to you guys is, are you struggling to make a profit on a consistent basis? Because guys, let's put all the cards on the table. If you have been trading for more than a year or for more than a year and a half, if you're not making consistent profits, it's time to check your your trading technique. It's time to take some kind of steps moving forward. After all, it's your money. Why should you be wasting it? Tired of seeing your gains disappear? How many times has it happened to you to get into a trade, it triggers for you, and then to get stopped out? Maybe it wasn't the right timing. Maybe it wasn't the right setup. So these are things that are quick tweaks that you could do to your trading. And also, are you having trouble deciding which stock to trade on any given day? And that also applies to futures, what E-mini to trade, or currencies, what currency pair to trade. So are you really having trouble selecting? Because that can be an easy fix as well. I'm going to share some details on how I select my trades in this presentation. So here's our agenda for today. I'm going to show you how to accurately spot opportunities in any kind of market condition, in any kind of market environment. Some easy tools that you can use that will help you identify high odds, low risk trades, guys. And let me tell you something. I'm going to show you some easy tools that are available to you right now on each and every single platform on the planet. So nothing sophisticated. And to be very honest, guys, I hate indicators. I haven't seen an indicator that is not lagging, okay? So I'm going to show you exactly how I trade price action. Also, how to build and monitor your hot list. Not and again, when you're starting trading, you probably don't have a lot of real estate, meaning monitors. You probably have your watch list on a Post-it note or on a sheet of paper, or even have it on your platform on that market watch list. But is that really helping you? So I'm going to show you exactly a technique that is simple and easy to use so you won't miss any trades from now on. And this is what I use. I use this list. I'm going to share with you later because I'm a swing trader, and I have to admit, guys, I'm almost retired from day trading, okay? I decide to swing trade because I want to have more time for myself. This is just a personal choice, but it can be used for day traders and swing traders as well. And I'm going to show you how I monitor my my swing trades as well. Just at a glance, all it takes is a couple of seconds for me to know what decisions to take. And again, we're going to recap with intelligent entry stocks and targets. Okay, so here's the thing, guys. Identifying key areas. This is key when you go to a chart. I'm going to pull a chart right now. Okay. Okay, the WFC. If you guys have another request, I could look at that particular chart, but if not, we can take a look at this chart as well. So first of all, when you take a look at a chart, the one thing that you have to identify are key areas, okay, are key areas, meaning resistance, all right, formed by the natural price action of the particular stock or currency pair or what have you, any asset that you're trading. So this peak right here is the resistance area for this particular stock. This swing high. Now, when you move and you can see a swing low right here, okay, this is support. So this is support at this particular time for this stock, okay? As it moves higher and it forms another pocket here, another pocket formation, meaning this green bar is taking out the previous red bar and it's into a sell. Some call it sell setup, some call it sell pocket. It's a sell signal, if you will. There are different denominations. Anyway, this B formation is again, resistance right here. Then it moves lower to another. It forms another swing low. Now, when this swing low completes, meaning you have to have the complete V formation, this becomes support right here. So first of all, this is what you need to identify on a chart before even going any further, okay? So support and resistance, this is key. This is key. But is it really? So is the support and resistance enough to take a pertain action? Well, let me tell you guys. Okay, first of all, support resistance is formed by different and many layers. Think of support and resistance. Think of an onion. All those layers are different support and resistance areas, okay? So there are so many layers of support resistance out there, and you don't have to, if you settle for just the support resistance that I've been telling you right here, right on this chart, this resistance or this support, you're missing out. So I'm here right now to share with you some kind of, to share with you what I watch for. First of all, I watch for major support resistance. Another, and a lot of times, even more important than major support resistance is minor support resistance. Okay, I'm going to share with you why a little bit later on. So these are the two most important that are formed by price action in the market, regular price action, natural price action, okay? Now, the next thing you need to look for in a chart pattern is a trend, right? Followed by a trend, you have to look and identify a trend line. Those trend lines that bracket the high and the low, the oscillations of the stock, whether it's moving higher or lower, there is an uptrend or a downtrend. And those channels, of course, there is a horizontal channel as well, but these trend lines are key because if you're in a very strong stock that is moving higher and you're getting a correction in the immediate vicinity of the ascending support trend line, that is a perfect buy opportunity for your asset. Now, intraday pivot points. If you are a day trader, these are a must. Sometimes they work perfectly for swing traders because they help them trail the stock, trail the currency pair, and especially for those of you guys that are trading futures and forex. Trading pivots, intraday pivot points are a must, and we're going to go into all of these on charts a little bit later on. Okay, moving average support resistance. I am not a big fan of moving averages, but there are 3 moving averages that a lot of traders focus their attention on. Now, more and more institutional traders are placing these moving averages on their charts, and the only reason why is because there are a lot of educators out there that use these moving averages, and they love to use them in their advantage. Now, last but not least, Fibonacci price support resistance, price retracement, and price extension. How important it is when you're getting a pullback. For instance, in a market, I'm going to show you an example for the Qs. You had your swing low, you had your swing high, and as soon as the stock or the indice or the market forms that cap on top and it kind of tops out, that's when you get your retracement tool on and you start putting up your Fibonacci retracements. Why? Because you want to you want to pinpoint those areas where that particular stock or that particular instrument of any kind is likely to pull back. You want to be exact. This is math, guys. This is not, you don't have to leave anything to chance. Also, how many times have you seen, and especially in 2013, even 14, and even now in 2015 market environment, it is a highly news-driven market, and if you don't have these indicators right here, and if you don't know how to use them correctly to anticipate correction areas, to anticipate buy areas, to anticipate projection areas based on which you calculate your target area and your reward zone, then, you know, you're leaving your trading at chance. Now, every time when you see a high that is, when you see a stock that is flying up high, and that is that all-time high, I agree. it has a void above. You find a perfect entry. Let's say it's a pullback into the 20 period moving average, into the 10 exponential moving average. Let's say it's on a pivot point. But okay, so you determine the previous high, okay, as a target area. But what if there is no previous high to relate to? How are you going to calculate your reward areas? Well, that's when price extensions are going to give you that information, that exact calculation. I'm going to show you in some examples that are truly going to blow your mind. Okay, here we go. So, first of all, and by the way, guys, I have updated all the charts, and if you have a stock that you want to throw at me, you know, just type it in the room. I'm going to take a look at it, and we're going to discuss on that chart. So I took these pictures and these charts last night. I wanted to make a very fresh presentation. So here it is, guys. First of all, what do you have to evaluate? Okay, what do you have to evaluate? First, when you're seeing a stock? Well, first of all, you got to determine the trend, whether it is in an uptrend or whether the stock is into a downtrend. First of all, it is safe and sound to trade with the trend. The trend is your friend. I didn't invent this, but I wouldn't trade against the trade. And why? There are certain day trading opportunities where you can actually take a counter trend trade, but even then, you don't know for sure if that stock or whatever instrument you're trading has enough energy to propel the price to the prior area of support or resistance, so you can have a really pertained target area. That is very difficult to foresee. The easiest way to trade is with the trend, because you're expecting symmetry on the chart. That symmetry is going to offer you a correct prediction of what the market will be doing and what the particular stock or asset will be doing in the near future. The next thing that you need to do is evaluate your key areas. So as soon as you have determined your trend, whether it is an uptrend or a downtrend, and make sure that all the trends on all the time frames that you trade are in sync. So I don't want you to have a really strong downtrend onto the monthly chart, really strong downtrend onto the weekly chart, and then on the daily chart you're going to have let's say a buy opportunity, but that is actually a counter trend trade. Okay, make sure that everything, if you're a swing trader, everything from the hourly chart all the way to the monthly chart, make sure they're in sync, make sure they're running on full throttle power forward for an uptrend, and for a downtrend they're accelerating lower, so they have a strong downtrend. For those of you that are day traders, make sure that you have, oh, I'm so sorry for that, make sure that everything is in sync with whatever you have going on. Okay, so the third thing that you need to do is define your entry areas, because you have identified the trend, you have identified the key areas meaning your support, your resistance areas, your support areas, and now it's time to define your entries, right? So guys, when you have a very, very strong uptrend, what you're going to need to do is look for buy opportunities, look for buy pockets, look for buy setups. Okay, so even though this pocket here formed resistance, you can see right here it is trading above the 200 period moving average, it is trading above the 20 period moving average. Okay, it just came from a long consolidation, and this is the daily chart, so it's not yet ready. It's not ready to take off, and it's not ready for sure. Even though it had a really nice move into previous support area, it is not ready for a long. Okay, so you can see that the price is residing below the 200 period moving average, which is very important because this tends to act like resistance for downtrends, and this tends to act as support for uptrends. Okay, so wait for the perfect setup to occur. Now you have a setup forming right here. You can see the cross of the 20. You can see the touch of the 20 and the 200 period moving average. You can see a perfect buy pocket forming right here, and this is the perfect buy opportunity right here. So this is another support area. I just didn't want to mark, you know, a lot of areas support resistance because on the chart, because I really didn't want to confuse you. But this is support, guys, right here, and this is a good buy opportunity for this particular moment in time, because Why? First of all, it has 3 odds in its favor. The first odd is that it is residing above the 200-period moving average. Price is trying to make it above the 20-period moving average. A buy pocket is formed and completed right here, right above $130, above the prior consolidation area. And then again, guys, it is a higher low compared to the previous one and compared to the previous one. So therefore, trending, okay, you have a series of higher lows, and right here you can expect a series of higher highs. So guess what, guys? If you buy this stock right here, by the time it reaches this target area right here, you have reached at least one R, one reward unit. So meaning if you're risking $100 for this trade right here, by the time it reaches the first resistance area, you've already banked $100. And then for your next target, you're going to refer to the previous resistance area on the chart, because you have a previous resistance area. You have that luxury to refer to a past price action. Okay, so there you have it. You have a little bit of stall right here. You could have you had a little bit of stall right here with the pullback. The pullback occurred right above the 200-period moving average. You can see that the 20-period moving average is actually combing and trying to push higher this stock. By this time, it accelerates a little higher. You can see that moving back, this is your second target area that was met. The pullback occurred where to? Exactly to the 20-period moving average, and the next day you got a gap up on high volume. So this is institutional volume, and this is what we need to look for, okay? But why did it happen? Well, look at this. It gapped up above this resistance area, meaning it's very powerful. So if you missed this entry right here, don't forget, don't chase the trade. You have another entry opportunity, and this time it was at this time and this point, and actually this was a trade that I've done, a swing trade that I've done. This trading opportunity right here was based on an intraday trading price action on the 15-minute chart, or you could very easily take it from the hourly chart as well. So moving higher, rocket bars right here, consolidation, strong consolidation. For those of you that don't know me, I love to trade bases. I love to trade consolidations. And these are my bread and butter. I identify them and I go after them like a hawk. And I'm not going to lie to you. They bring me so much money, more money than I make in any kind of strategy. So look at this consolidation right here, price resistance forming right here. And guess what, guys? On a next pop right here, if you missed this trade, you would have had another entry opportunity right here with a very small risk. But if you would have been in this trade, this would have been a great add opportunity. Add more money. The money that you've made here, risk again at this point. And this point, make it higher, make it a new high at 158.83. This high right here, and of course, according to your trail management and plan, you would have applied it right here to lock in some, and then or wait for the next pullback, which is likely to happen where, guys? Into this support area. But how is this support area formed? Formed by previous price action from the past. Meaning prior resistance becomes support for future price action. So here it is, guys, predicting the blueprint, right? Okay, breakout right here. Now, at this high of 158, a really good trained trader will not be scared to be in this trade again. He will just place his stop below this resistance area right here. That is and this stock is most likely to come back and test this area before it takes off again. But guess what? If it breaks this area, you are trailed out, but you're still left with this big money that you have accumulated, right? Pay attention to the 20-period moving average that is here. Pay attention to this ascending moving average that is actually carrying the price higher. You can see a little bit of a pullback here, testing prior low right here. All these resistance points that you have here, they're areas, they're not exact numbers. So if you can see $150 here, please consider, give or take, a little wiggle room for price action to stabilize before it reaches a decision, whether higher or lower. Remember, the stocks and especially even currencies and futures love to test these areas before continuing higher or even stopping you out. Why not? Okay, so the one thing that you need to do, just to recap everything here, is that first of all, you got to identify the trend. Identifying a trend is very easy. Look at the time frame that you're trading, and you have to identify higher highs and higher lows for uptrend and lower highs and lower lows for downtrends. You have to identify the key areas, meaning support and resistance, and identifying these key areas, these are going to define you, your entries and your stops, and also your target areas, because everything has to be calculated. Okay, now moving forward, buy opportunities off trend lines. Now we've talked a little bit about trend lines, and I've told you that there is a succession of higher lows and higher highs that are formed on the chart, and they're easy to identify. But try connecting them with lines. You have to make these lines as parallel as possible. Remember, in uptrends, the bottom line acts as support, price support for price action, and the ascending trend line acts as resistance for future price action. So note here what happens. Every buy pocket that is formed right on this trend line, pocket formed right on this trend line. Very, very strong price action here. Now, buy opportunities here as well. Even if we have a downtrend, you would see the same chart but upside down, and you would have a succession of lower highs and lower lows, and the opportunity to sell will be on top versus the bottom. Okay, so in a strong uptrend, shorting at resistance is never an option for the TradeOutLoud trader. So here, even though we had a nice movement, you could see the consolidation took it a little higher, and then it pulled back. Now this is the buy area right here. You never short it. You never short these areas, okay? Even though you had a really nice pullback here, I never go counter trending, and that's how I get my batting average of 78%. Now, we talked a little bit about pivot points, and I'm going to share with you that there are 7 lines that I look at the chart. For those of you that are not using pivot points, that are not acquainted to pivot points, let me share with you that this is the calculation of the pivot points is generated by most of the platforms that I know out there. I use Thinkorswim platform. I use it for my managed accounts and for an institutional version for my hedge fund. But all of them, most of the platforms, they automatically generate it. First of all, when you're going to look at the chart, you're going to notice a median line, and this is the more neutral part of the chart. The more it starts trending a little bit higher, the more it's going to start signaling that your stock is a little bit more bullish, or the currency that you're trading. And again, if you see a consolidation that is happening off this pivot point right here, guess what? An object in motion tends to remain in motion. So therefore, if we had a first pop to the upside, consolidation most likely is going to continue higher. Please note the reaction at these areas right here. Consolidation at this, suggesting a move higher, peaked through the second level of resistance right here. Turnaround point, so you can see that this actually is a 5-minute chart, so you can see 1, 2, 3, 4, 5 right here. So for 20 minutes or so, it has been basing at this price level right here before pulling back. So strong reaction. If you're a day trader, I would highly recommend you start watching these pivot points. And again, it ran higher. Okay, please note the moving averages as well. All right, moving forward, we have a lot of material to cover. Moving averages, guys. Moving averages. You gotta find if you're really new at trading and you don't really want to go naked into trading without any kind of indicators, I highly recommend you use these moving averages, because they suggest the trend. So it's an easy way to identify a trend. I'm sorry. First of all, if the stock currency, what have you, is trading above the 20-period moving average, means that the price action is more likely to continue higher. If it's stabilizing in the middle, and you could see pretty much a flat 20-period moving average, and this is a simple moving average, pretty much the price will be kind of flat, and there is no immediate reaction. But think again, if you're having a very strong uptrend and if you're identifying a flat 20-period moving average, then guess what? Look for a breakout above that 20-period moving average. So very important, guys. And again, here, I'm using the 10 exponential moving average as well, and this is for aggressive scalpers and day traders as well. This is a more accurate reading of the trend on minor time frames, such as 1 minute, 2 minute 5-minute, even 15-minute, but I wouldn't go as far as using it on the hourly chart. And then again, look at the buy opportunities that are rising along these moving averages. Parallel moving averages suggest power trend development, so very, very powerful thing. Also, I've mentioned about Fibonacci's and using Fibonacci's. Fibonacci's are not very, very hard to read and not very hard to use, but they are very accurate. I'm going to show you the market today, how it reacted today, based today, price action after FOMC. Where did it go? And where did it bounce from? So very interesting stuff. All right, so you can see right here what happened. This is Alcoa, AA. This is the daily chart. And again, guys, if you're using this, if you decide to use Fibonacci's, I wouldn't go to use Fibonacci's to very small time frames. I would start using it starting with the hourly chart. These are, and they're giving you great predictions for day trading at the targets, especially for stocks that are all-time highs or that are entering a severe correction or in any kind of correction of any kind. Now, this is a very sloppy chart pattern right here. Okay, market close, guys. Okay, so here we have it, guys. We had a move up, and from the swing low to swing high, I decided to, following this gap down right here, I decided to draw this price retracement, Fibonacci price retracement, because I just wanted to know, is there room to go below this, even if I have a prior low right here, but would it go below? Okay, will it go below? I have certain levels that I use. These are some of them are proprietary levels, and they have been developed with one of my mentors that very fond of. Actually, I owe everything to everything that I know to him. I was actually, I had an internship for a year and a half with an institutional trader, very big institutional trader on Wall Street, and I'm very happy to share with you guys everything that he taught me, and to be able to pick their brains and getting into their skin. And remember, guys, this guy is not a professional trader. It's not a guy that is taking trading as a profession, and like most of us do, stay home and trade. No, this guy goes every day to work, and this guy is one of those guys that gets the big bonuses at the end of the year. Okay, and these are things that I have learned from him. So what you see right here is using Fibonacci price retracement in action, and these actually are going to give you some levels. So when regular support resistance from natural price action from swing low to high or high to low does not offer you that that blueprint of what's going to happen, you should start using Fibonacci. You should start using definitely Fibonacci extensions and Fibonacci retracement. Now, in this case, we're using Fibonacci retracement, and you can see right here that these retracements go beyond 100%. So they're giving you clear indication as to where this stock is likely going to go and likely going to follow through to the level. Okay, so very interesting stuff. Also, right here with Apple, this is a chart from last night. This is Apple right here. I have an active signal in Apple, and I actually bought it right here. And why is that? Because after it formed this cone, this sell pocket right here, I immediately took out my Fibonacci price retracement tool. I connected the swing low to the swing high right here, and I generated a portion for where I can actually get another buying opportunity. And look at this. Perfect buying opportunity off the 38.2% level. And guys, this level right here is actually the magnet line. This level right here on the retracement is the most important. So if you want to leave with something that is very important for this class, just remember that 23.6% retracement is a good retracement in a news-driven stock, in a news-driven market where pullbacks are very brief. If you're looking for a more healthy retracement, you're going to go through, and most of the retracements that occur are at 38.2% level. This is the level right here. This is the magnet line. And again, a very healthy retracement. Consider the 50%. 50%. This is not a fib. This is not a fib retracement. This is actually a 50% measured move from low to high. Okay, now buying opportunities. This is Humana right here. This is a stock, guys. This is the stock that is that all-time high. How do I calculate? A target for it? I find a good trading opportunity. Look at here. A good consolidation onto the daily chart, a really good, cool pullback right here into between the 38.2 and 23.6. Consolidation the way I like it. It takes off, but where's my target? Do I leave everything a chance, saying that, okay, you know what, the stock is into the void and it can actually go anywhere? No, you're wrong. I have to apply my Fibonacci price extensions that would give me projections for higher targets. This is a target that was reached yesterday, not yesterday, but the day before at 175.3 because I took the picture of this chart last night. So target, look, everything is measured move for me. I don't leave anything to chance, okay? So really, don't think, oh, it's into the void. Really, no, you have to have a measured move. But if the stock is at all-time highs, it's trading at all-time highs, you need this. You need to know how to use this tool, and it's free. Okay, building a hot list. We only have 5 minutes left. I want to squish everything that I know in here. I hope you guys will benefit from everything that I say here. So building a hot list, basically create a hot list for stocks to watch, whether you're a day trader or a swing trader, and use this list to keep track of your ideas. Okay, from time to time, you've got to go ahead and comb through these ideas. Here are some tips to keep in mind. Always keep your list fresh. So comb through that list and watch that list and see if that stock still meets your trading criteria. If it does, leave it on the list. If it doesn't, take it off the list, and you have to scan for more fresh trading ideas. Limit the number of stocks that you have on watch. Don't overcrowd it. If you are a beginner trader, don't watch more than 5 stocks, okay? But make sure that when you watch those 5 stocks, those are not the 5 stocks that you collect, say, oh, I'm going to watch Apple, Google, and this and that, and Facebook. No, you got to watch stocks that are in play in that particular day. And how to view your list, okay? Well, it's one thing to have a list on your platform, and well, most of the platforms generate those lists, but also it's great to sort them according to volume and percent change, and I'm going to show you exactly how. This is one of my watch lists right here, and this is the button that you actually click to select them ascendingly or descendingly according to that net percent volume. Okay, and that's going to give you the runners, and in the latter part, it's going to give you the laggers. But here's how you basically watch it. So if you chose trading to be your career, then guys, invest in monitors and invest in a good computer and have the real estate. It's going to make a lot of difference when I tell you this. The more monitors you have, the more information you're going to have, and you're going to take more pertain action. Okay, this is how a watch list looks like, and this is a 15-minute because I'm a trend trader. I watch the 15-minute chart most of the time, and these are just some of the stocks, let's say, that I had on my watch list a couple of days ago. And for buy opportunities, you can see right here there's a buying opportunity forming. You could see right here that there is a base opportunity for a continuation higher. You can see a lot of opportunities. So this list versus, so you have this versus this. This, you're going to look in a fraction of a second, you're going to say, yes, it's above the 20-period moving average. Prior highs at $80.89, so I have room to continue higher. The stock is only trading at $86. Pretty much I have $2 to make in this stock, okay? All right, intelligent entry. So for healthy, rapid, and fluent follow-through, you need to take into consideration key areas where institutional traders are looking to buy and sell. And I mean institutional traders. You got to follow the money. You got to follow the footprints of really big traders. Always be in sync with the market and whatever the market is doing. So if the market is pushing higher, don't go shorting stocks unless that stock is, I don't know, really on its own. But guys, consider trading with the market, because if you're trying to get a relative strong stock in a strong market, and that stock is more powerful than the market, that's going to go full throttle ahead with the market continuing higher. Stay away from news trading, and stay away from penny stocks, and stay away from basically stay away from news, okay? Know the days in which you need to stay away from the market. Remember, FOMC days are a perfect day. Friday, we're going to have option expiration, actually quadruple option expiration. It's going to get crazy. Take the day off, okay? And try to read through your notes, through your, get up to date with your trading studies. So what is an intelligent entry? It's a buy or a sell pocket or a breakout or a breakdown that is formed on one of the key market areas, either support resistance with a strong trend within a healthy retracement area, correction area. We talked about those correction areas when we talked about the FIPS. So what is an intelligent stop? A stop placed above or below the area of interest, allowing a small wiggle room for the stock to breathe, and always take that wiggle room into consideration when you're position sizing. So how about a target? Remember, nothing is left to chance. You need to have a target measured before you even step into the trade. Some things to consider: prior support resistance layers formed by previous price action, and if a stock is at all-time high, consider projections. Here are some examples. This is the trade that I'm in, Tiva. Beautiful consolidation, breakout above the 20-period moving average. This is the signal from March 2nd. You can see how it's running strong higher to our further targets. You can see it right here. Beautiful, beautiful trade, beautiful consolidation. Look at the potential that you can have in small stocks for those of you with small accounts, for those of you that don't trade the apples that have, a lot of movement. Look at S right here, consolidation. Once it peaked out above resistance of this consolidation, rocket bar above. Look at this, guys. For 15-cent stop, if you would have averaged $1,000 risk for this trade, guess what? At $5 and about 50 cents, you would have made $9,000. Okay, and this is from January to about March 2nd or 5th. Okay, so $9,000 in one stock. Okay, so guys, if you want to stay in touch with us, TradeOutLoud.com, send any emails, and if you want a copy of the presentation, send me an email to info@TradeOutLoud.com. We have a free trade of the week that we deliver to all our followers on Facebook and Twitter, so make sure you follow us, facebook.com/TradeOutLoud. Also, what I have ready for you guys is a super class. It's actually being edited right now as we speak. I have somebody that is editing the class, and we'll be ready on Saturday. It is a recording. It's called Advanced Technical Analysis Mastery On Demand class. This is for stock traders, for ETF traders, for futures traders, for Forex traders. And guys, this is for every instrument you trade and any kind of trader that you are. Whether you're a day trader, if you like scalping, if you like momentum, if you like trend trading, if you like gaps, if you were like counter trend trader, if you are a contrarian and like counter trend trading, this is the class for you. And also, of course, for my very sweet spot that I love in trading, for swing and position trading. This is a one-time only offer that I'm making. The regular price is $599. I'm offering the class for $59. Only 40 copies, guys, I'm giving away. So if you want to rush and get this class, I highly advise you to do so, because they will go fast. Each and every single time we're sold out, and I'm not sure that we're going to do this again. So what you will get with this class, you're going to get the manual, 130 pages. You're going to get the on-demand recording. They're over 4 hours. Actually, they're about 5 hours of recording. You're going to get unlimited access to me. If you have a question, email it to me or even Skype it to me, and I'll make sure that in a couple hours you get your answer. Remember, when it comes to money, you have to ask the right questions, and there is no other, I can't imagine somebody having a question about trading and not having an answer. And also, with this, you're going to get a 30-day free access to the weekly swing trader. You're going to get a little bit of a feel how it is actually a really long letter, a newsletter, and I provide 5 trades per week in that newsletter with technical pictures, with precise entry stops and target areas, and follow up on those particular trades. once a week. And if you have any questions, you can feel free, because everybody's trading is different, you can feel free to email me at any time. So 30-day free trial of the weekly swing trader with 5 weekly trades a week with the market prediction for the following week. So for the following week, what to expect from the market. It's going to be your crystal ball. If you want to go and register for that, like I said, only 40 copies. TradeOutLoud.com/ATM. And this offer expires Friday, March 20th at midnight. Okay, so there is limited time, and we're going to take it off the website. So you're only going to have it for 40 copies. And again, the mailing will go out this Saturday. So the class is still being edited. It's actually with very new charts with this week's charts, and we're talking also about this week's market and what to expect for the next quarter. We're refreshing this class every quarter. So if you want to get started on it, remember TradeOutLoud.com/ATM, and if you have any questions about trading, info@TradeOutLoud.com.